JP Morgan is warning everybody that we're about to face a financial accident. And why wouldn't they? Every time we see Treasury yields go this high, something breaks. But will the Federal Reserve come in to support the markets once again? With breaks below the trend line in the markets, Treasuries in free fall like we've never seen before, and of course the long date yields so high and breaking to new highs each time, the pain train is here. But what are dumb and smart money doing? Let's take a look together at the markets around the world. Well, welcome back everyone to the Daily Show where we talk about the macro lead indicators and the hottest charts. It was Capitulation Tuesday and it kind of lives up to its name over the last year. Yeah, Tuesdays have been one of the worst sessions along with Wednesdays for 2023 so far. But what was probably more interesting about it is all of the indicators that just were setting alerts on the day. New lows on the stock market, extreme fear on the fear and greed index, and some interesting stuff on smart money. So we hit 17 and actually 16 at one point. This marks a 12-month low for the fear index. We're hitting extreme fear at the exact time when we make a new low on the S&P 500. It sounds like we're in that capitulation we've been looking for. Smart money also has started to buy the dip, which you can see over here on the right-hand side. And while that might not mean much because it's just an indicator, it does show you that somebody's getting a little excited about this market right now. We posted over on our X, follow in the links down in the description below, and of course subscribe and hit the alerts if you like what you've seen so far, that we were looking at the bullish percent index for this, and we've been following this since August. It's been a very nice indicator, and I'm going to give it the tick of approval because today we saw something happening. Capitulation was coming in, and we started to see a big red bar. So by the end of the week, if we keep selling off even a little bit more, we expect this to kind of get back down into those 20 levels. And when that happens, it could mark a very significant turn point for markets. Whether we're even seeing everything is negative and everything is red right now, there are some interesting things for bulls and bears in this video. The first one is CTA positioning. CTA positioning, even though it's a blurry chart, is incredibly negative. We haven't seen this so low even during 2022. So that's an interesting one indeed. A lot of people are also speculating that we should see a tech sell-off because tech has followed yields for so long. Unfortunately, there's actually not that much back history that goes with Treasury yields and tech, so you'll find that they're actually not as supported as you think, but people are sharing charts like this over on the internet, and of course I can see why. But let's get into where we think there's some edge right now. Well, first up, what about these shorts on Treasuries? Wow, the yearly net positioning is the most negative it's been in over a decade. And this is not just by a little bit, this is a huge amount. Imagine if they start to unwind this position. Wow, Treasuries are going to be one of the wildest trades at the back end of 2023. Yet we still haven't seen a turning point. We have liked it at a certain level it hit recently, but we still don't see structure from a trading perspective. And we'll talk more about that later on. Also, everyone's talking about utilities once again. Now, this is an interesting one. A huge sell-off, a panic sell-off through utilities, mostly because of a stock called NEE, which Nextra, and it got downgraded and basically everything sold off across the board. Take a look at these stats though. We've only got a few data points from when this has actually occurred in the past, but during a capitulation sell-off such as this, look at those stats of what happens next and the gains that tend to come out of utilities. Of course, you've got to be cautious and make sure you take your own risks there. We do know that the people have turned really bearish. We expect probably after today's capitulation in markets, most likely even more bearish reads to come out. And that's a good sign for bulls as well. The sentiment is starting to get incredibly negative. Meanwhile, let's take a look at property and see what's going on. And yes, there is a lot of bullishness going on through the world here. Inflation is helping to still keep property high. And you might think, well, it's selling off. Well, according to the stats, not just yet. Australia, USA, Canada, many other countries still going up. Though some places in Europe have been stagnating and possibly even turning down. But this is what we're all looking at right now, the seasonality. What helped us to maybe define the sell-off in August and September here on the channel together. We've also been looking for the potential low. And in pre-election years, we talked about how that usually happens the back of September into the first few days of October. That's usually the turning point. And it could be. In most years, though, on a 25-year study or even on a 95-plus year study, we tend to see the middle to the later part of October being the low point. So we are here. We are literally right close to the month that you usually expect turnaround stories. And even regardless of the news that's coming out, that tends to be what goes on. Here are the kind of analogs towards 1985 and 2023, which spoke about in our last video, obviously saying that when we have negative August, negative Septembers with such strong forward months of the year, we do tend to have still a pretty good run. And October is going to be that month where I think it's going to define the rest of the year. This is the big one, and we are finding ourselves in it. What about the unusual trades? Did we get any big ones coming through? Well, actually, it was a bit lighter than you would think on some volumes over the close, and that could suggest that we get further selling over the next couple of sessions. But more importantly, we also saw some big trades in RSP, so that's the equal weighted market, saw a big trade coming through. The market sold off from that point. It doesn't mean it's not necessarily a buy though, but somebody did trade down there. We've also just kind of bringing up another one which turned out to be a sell. I actually thought this might have been a buy to be real, which was on the ultra short Qs. Now, generally speaking, we saw SQQQ, TQQQ, and a few others find some large trades. They have been proven to be, of course, sells. Why do we know this? Well, the price action since that point has just been basically down. But we'll talk about the double strategy you could have used on markets over the last couple of days and why it paid to actually be both long and short in the market at the correct levels that we spoke about in our last video. And we'll talk about that just from a TA perspective. Let's bring up unusual options activity. What's going on in rotation? Well, it was unusual options activity in the SPY. No surprise, a bunch of people starting to buy puts here. We also saw the Qs finding a lot of trade. And then we had some interesting ones. Look at this. iShares 20-year Treasury bonds, 4.22 times 90-day average volume. And there are now almost equal puts and calls. Still more people buying calls. But today was that type of day that you're starting to say, did we just see capitulation on Treasuries? As we scroll down, there's a lot of other ones, Nextra as well, coming in with even more puts. So that's starting to look like it's getting that bounce. Maybe it's done its sell-off. But we had a 52% put day versus 48% calls. And what I'm looking for is more puts in the system, which we'll look at in a moment. And at the same time, I would also like to see really negative fear. Well, we've got that one, I guess. And we also want to see things like put-call ratio in general just go to absolute ballistic amounts. Let's talk about what's going on in rotation. Semiconductors had the best of the last 5 days, which is strange because you would think in a sell-off such as this, semiconductors would be sold off. But take a look at this. Things have changed. Semis and technology and communications, they're holding pretty well over a 5-day average. Utilities, solar, gold, ag, all of these markets, they're really down quite hard. So it's a strange rotation that's going on in these markets during the sell-off. Utilities was the best of the last session, but a lot of that's just getting back to where it was oversold. So a little bit of a relief coming in for utilities overall. Let's get into the charts now and take a look at what's really been happening though underneath the hood. First up, how low are we by standards? Well, first, this is capitulation day, and that's the type of thing you're looking for. Usually you hope for about 1 to 3 days of capitulation usually to get us down to these right levels. 32% of the stocks are above the 200-day moving average, but this is where it gets really interesting. Look at those percentage of stocks above 50-day. We're almost back in the September, June, and March lows. In fact, we're actually underneath where March was in terms of overall sell-off. Percentage of stocks above the 20-day moving average moved down as well. And I think this is actually a little bit outdated. There should be another read on it. Let's get the daily there. There it is, 14.85. And I'm just going to give you the daily here for the 50 as well, which is 15.5. So these are super low reads. There's the updates there. 15.5, 32 on the 200, and some seriously low points. So again, it's kind of showing you that maybe the markets have found potentially the sell-off that we've been looking for again for these markets to, maybe actually form a base. This is the kind of thing that happens when you go into these big fears. PCC put-call ratio, not quite at those highs yet. We're looking for ideally like a 1.25 read. I haven't been using PCC as much, or we haven't together. And the reason why it kind of broke a little while ago, but it is there. But here's where it gets really wild. The US 10-year, take a look at this, 4.795 up. But have a look at the US 30Y. When you load the US 30Y up, it really puts in perspective how much been's going on. Since September, this is only Friday, this is a 2-hour chart. We went from 4.663 all the way to 4.9. So you can see how it's been squeezing people. There's the daily there. Look how it's been squeezing everybody out in terms of the move. And this is causing incredible volatility in the bonds. So the move index is finding that volatility coming back up. Last time we saw this, we saw it in March of 2023. And again, as it was spiking up here, we got that capitulation. So we've seen finally 2 large days of move index moves. And that's the kind of thing that you're looking for. You know, you want this fear to come into the market. Also, VVIX, volatility of the volatility, is starting to rise back up, and the VIX itself is at 20. So volatility of the volatility, it's up, not quite near where March is. The VIX itself hitting on to 20 today. We're obviously looking for a 25 plus read on that as well. It's all starting to happen, and this is exactly what we always expect when this does occur. Some interesting things here as well, high yield bonds. I mean, there is so much to talk about. It took me a while actually just to go through all the data here today, even though I'm in the US. I spent quite a few hours kind of scrolling over everything because there was so many reads happening. We had high yield bonds just getting obliterated over the last 2 sessions. Take a look at this. We were talking about how there might be a little bit of a recovery in bonds, and maybe it was relief rallying, hit the 20, and then just bang, bang, 2 days down. Yields, just absolute pain trade towards the upside. Same thing with treasuries, no structure. You'll remember that we thought about 88.90. That was our initial target, and I'm not going to go back on that. That was a target for shorts for treasuries. We didn't really see any structural turnaround in the small time frames, but now it exposes even lower. Could we go back to an 82 read or an 80 read? The last time we saw this was 2007, before the whole global financial crisis, and you can see that this is really the lowest it's been since inception of the treasuries. So it's a monumental fall, and I think for some people you don't quite realize how big this is. I posted over on Twitter X about it, and I basically said, you know, this is sitting in the 53%. Some treasuries are down as much as 58% from their highs. I just can't remember a time where it was so drastic in terms of just that chart from top to bottom. And I posted that if you said that to someone back in 2021, 2020, they would have called you crazy. So what's the moral of the story there for us all? We have to always expect the unexpected. Unfortunately, that is something that can happen. Don't discount that something can't happen. Think back on some of the history you've already seen in markets over the last couple of years. There have been some incredible lessons there. Let's talk about home builders. Home builders is down big time, and we thought there might have been a little bit of reprieve here. Nope, there was no reprieve. It just sold for the next 2 sessions, and it kept falling down. We are looking for a substantial turn in home builders to show us again that the low's in. Bullish percent index, something else we're looking for. The US dollar hit it finally. It actually just reached 107 flat. That's a huge read for this. This is basically really coming up to that last level of resistance or supply. And if the US dollar keeps going up, I don't see how the markets won't react negatively towards that. It's going to be a big problem. And that's also going to be a big issue for treasuries as well. It's like a feedback loop going on at the moment. So if we think about it, where could the US dollar go? Well, if it breaches this zone here, next stop is going to be like a 112. There's really nothing stopping it in between then. So US dollar at this stage, maybe it's topped in, but we don't know that yet. We'll be watching the structure very, very closely. This led to, of course, some other things going on. In fact, we'll load gold up just to point it. Gold actually hit one of our targets, which is the bottom of this box. It didn't quite hit it perfectly. 1810 was a target that we've had since this sell-off occurred, and we're right down in that zone. So for gold bugs, they're going to be looking for structure. Do we know the low's in yet? No. Do we know it's in a zone of interest? Yes, we do. Of course, this is exactly where we want gold to potentially find buyers again. But it does show you that even when you are sometimes a bull, you've got to be flexible. So we talked about the idea of GDX. There was a trade in here. We'll actually load GDX up just to show. And when you've got to just know when to hold them and know when to give them up. So in this case, of course, we had GDX positions that we liked in here. We had break evens. We had obviously, scale outs, those kind of things. And once that low was taken, look at the brutal sell-off that ensued since then. Again, as traders, less than investors, you need to be able to figure out when you need to fight the system and when you maybe need to just give up on it. Oil, could the high be in? Well, I think there's some great levels for us to alert now. Definitely set alerts at the high. We'll do so together right now because this is going to be a super level in the future if it does happen. It's going to create a massive squeeze, I would say, which is that 95.20 plus. But look at this, 2 rejections, basically long leg dojis. If we go down to a daily, you can see it closed underneath this 20 here, and it's been in a pretty consistent upward trend. So what I'm thinking at this stage is that oil will probably go up a little bit more. It's been front running yields though. So when it goes into, let's say, a 92 again or a 91.80, if it does get there, that's where those bears are going to be pressing. So I think day traders will be pretty close to watching those zones. You've got to be careful, of course, follow your own systems, make sure you have replication in those kind of accesses. What about AAPL, the biggest stock in the world? This one here, yeah, it didn't really do that much actually. It only was down 0.78%, still holding itself. If we go to something like a semiconductors sold off that moving average and they've sold down, but again, no new low. So Apple not really selling off heavily. Semiconductors, the strongest market sector, not really selling off heavily either. So it didn't make a new low while the rest of the market was doing it. And the NASDAQ has been pretty strong here. So on the contrary to that, Amazon did find some weakness. Again, no new low, even though it was down 3.66%. And then we saw Microsoft and some others, again, no new low. So a lot of tech stocks are kind of, they sold heavily, but you could actually make a case for smaller time frame traders to come in and say, well, this is exactly where I want to buy. You know, there's going to be some risk reward people saying, well, you know, risk reward's going to be worth it at these points. You have to make your own decisions. But I could see why, you know, on a day like this, tech itself looks a lot better than the rest of the market. It certainly has been holding up. Another tech that's been holding very well has been Tesla, and it's doing pretty damn good actually, holding around this 245. So this is a level where we expected bulls to potentially be placing orders. At this stage, they've been holding it up. We'll have to watch and see whether the market can regain itself. But yeah, a good zone for Tesla. I don't know if I'm bearish at that point. KRE, this is one, in terms of the regional banks, you often do look for banks to recover. And we talked about how in here, there could have been a buyer. This proved to be too much, which was, of course, the shooting star candle coming off the 20 moving average. And we've come back down to these previous lows in the green box. So will regional banks kind of find some kind of buying pressure? We'll be watching very closely, but for now, we don't see them finding strength. And then there was the German 40. Now, this could hold potentially the keys to the rest of the markets, and I might explain why. We talked about this being a Wyckoff for what seems like months, and it probably was quite a while ago. When did this all start? Let's have a look over here. Yeah, so July. So basically, we've been talking about this being weak for quite some time. It's pretty nice Wyckoff, pretty consistent. And once it broke through here and it pulled back, we kind of expected it to stop maybe around those moving averages. The intersection up here didn't quite get up there, sold aggressively, made a new low. Where's the next stop for it? Well, we kind of speculated it's 14,800. And that's going to mark an interesting point because we made a new low and it closed on its low. So I think that's the important thing here. Remember, where markets close is key. So if we have a look at something like S&P, you can see here didn't quite close on the low, but certainly on the bottom end. If we have a look at something like the Qs, just to see the close, again, a little bit of buying near the back end of the close. But the German market just did not do that. The futures just kept pushing down and down and down. Aussie market over here, big low point, obviously bought before. Not going to predict that yet, but we do have a massive turn level in the future. So we'll set an alert above 7,100 or just around there. If that happens, I'm probably going to start turning pretty bullish on the Australian market. Same thing for the US 2000. It was capitulation. 2 days of incredible selling, pushes it back down into this structural zone. Actually went underneath our green box down here. I'll be interested to see how it reacts. Usually with sells, you kind of have 3 days. Technically, it has been 3 days, but maybe 2 days of big ones. And because of the light volume that we saw in comparison to what you might think there was, I feel like there could be even another one in it. So yeah, proceed with caution. US 2000 will hold the key in the future, I'm sure. NASDAQ, what's going on? It's pretty strong. We really should be down here. We should be around 13,950 at this stage in comparison to the market. So it just shows you the Magnificent Seven are really holding up incredibly well, semiconductors and everything. And it hasn't been a broad-based sell-off outside, like it's been a broad-based sell-off outside of those Magnificent Seven, but they're not selling as heavily as the rest of the market. Then we go to the S&P 500. It's underneath its trend line. You can see here the one we talked about. Daily 200s, 4,200, 4,150 and 4,100 are exposed now. and you kind of feel like it's almost inevitable the markets will want to go down here. If they don't and they reverse, then we've got pretty good levels that we can look at. So let's talk about everything that's going on. First up, let's talk about the double from the last video. So we spoke about it, I think it was around here. Yeah, so that was the weekend. So we spoke about the idea that there was both a short and a bull bias, and the short bias was literally right there, and the bull bias was pretty much in here. So we actually saw a reaction on both ends. We saw the short bias come through, cool. Then we saw bull bias come through. And what you could have done is you could have gone short, broke even down here. I mean, if you picked the right position, which I would have hoped that you probably would have, then you could have been still in it for both the long and the short. Of course, did you lose on the long position? The answer is yes, you would have. And the short position has come through, and of course, it would still be in, it would be broken even, and you can make your own decisions. But it does show that if you find the right levels, and even if you don't necessarily know, because you can't necessarily predict it, if you do react and you find the patient correct levels, it can make a huge difference to your trading style. So you lose one, you make more than two on another one. Well, that's not a problem at all, is it, if you get into those? Anyway, for now, we've got a new low. Obviously, that opens up some interesting factors. And if we think about where the markets are, we've got that daily 200 here on the futures market. And then we've got a 61.8 pullback, which sits around 4,100, 4,150. So that is also the last 12 months most traded zone. So the most traded zone is down here. If markets get down to this area, it is the number one zone for us to all be watching together. The way the market reacts there is going to be so interesting, and I'm kind of pumped if it does happen, just because I think it gives a lot of people opportunity to make more informed decisions. We also see forward PE as well that we'll be sharing over on our Twitter in terms of what's been going on recently, because forward PE is starting to get interesting on the S&P. It's underneath 18, so it's less than 18 again. Now, for anyone that knows, it's about 16.5 to 16.8 in terms of the average and medians. So what we're looking for is, really low 17s, so underneath 18, which we are right now, we're about 17.8. If we can get into low 17s, well, that's interesting as an investor, more so than a trader. Of course, you've got to take your own risks, but from a statistical background, it is an interesting point. Depends how bad you think things are going to get. How's Bitcoin going? Bitcoin has been jumping on up, and it still looks relatively positive on the charts. If you took some profit at 28, I guess well done to you. I would have thought this would have picked a little bit more up, maybe to 29,500 before seeing this recent sell, but maybe the market's too much for it. But Bitcoin's still holding very, very well in comparison. So pretty strong market at this stage. I think most of us want to always know, what's the reason for the sell-off? Well, everyone's going to say it was the JOLTS job openings, 9.61 million versus 8.8, and usually it won't move the market this much. This time around though, due to the importance of the economy and of course the higher for longer kind of new rate concept, even though it's not new, we've known about this for a long time, that pushed it through. So I guess we will need to be paying attention to some of these other things. We've got non-farm employment change, the prelim figures coming in at 8:15 a.m. New York time. Then we've got the ISM services PMI 10 a.m. New York time. So that's going to be a big one here on Wednesday. And then we move through the big kahuna number, which is the non-farm employment change. Now that's coming in 8:30 a.m. on Friday, October 6th. With historically the best days of the week in 2023 being Monday and Friday, it will be an interesting one to see whether we're selling the rumor and buying the fact. Anyway, guys, if you enjoyed today's video, make sure to subscribe, make sure to hit that alert button, appreciate it. Put in comments down below how low you think markets are going to go before they turn. Have you got 4,200? Have you got 4,150? Or are you a really big bear and you've got like 3,200, 3,600, something like that? Let us know. We'll be looking in the comments. And of course, whoever gets it right, maybe we'll pick out your comment in the future. Thanks so much, everybody. Bye for now.